Hi viewer, in 2025, global stock markets surprise everyone. Japan, China, Hong Kong and even Latin America rallied 25 to 50%. But India, one of the fastest growing economies, underperformed. So the big question is, did India fail, or did the world just catch up? Let's decode the real reasons. India began 2025 trading at one of the highest valuations globally. Nifty 50 was already priced for perfection. Meanwhile, China, Europe, and Japan were deeply undervalued. When global liquidity improved, investors chased cheap markets first, not expensive ones. Forwards pay in 2025 was 21 to 23 times for Nifty, 23.8 for S&P, USA, and 13 to 14 times for Hang Seng China, and world pay was 24 times. Reports also ranked India as among the most expensive markets globally, close behind the US in mid-2025. Indian corporate earnings did grow, but below expectations. Bank margins peaked, its spending stayed weak compared to global trend of heavy investment in AI, data centers and commodities, and FMCG volumes also slowed despite tax relief. So earnings growth couldn't justify further valuation expansion. Result was that we saw sideways markets in India during 2025. After years of inflows, India became an overweight trade. In 2025, global funds rotated to Japan due to corporate reforms and weak yen, China or Hong Kong due to policy pivot and deep value, commodity or reform markets. And India saw muted fee flows. Few countries whose pay was modest were Australia at 21.2 times, Canada at 20.3 times, UK at 20 times, France at 18.9 times, Germany at 18.4 times, Japan at 17.4 times, Brazil at 11.1 times. Last 1 year returns of core index of most of these countries were at least double of Nifty 50. RBI stayed cautious due to inflation and fiscal pressures, and higher interest rates capped valuations. Meanwhile, markets benefiting from rate cut expectations, like US tech and China tech, rallied strongly. General elections created a temporary wait-and-watch phase. Big reforms, capex announcements, and divestment slowed. Markets dislike uncertainty, even temporary ones. So India didn't crash. It consolidated after a multi-year bull run. Other markets rallied because they were recovering from long bear phases. So remember, 2025 was not India's bad year, it was the world's catch-up year. India's PE will become attractive when earnings accelerate, interest rates goes down, foreign capital returns and reforms translate into measurable export-led growth. And remember, markets always move in cycles, so a moment of optimism may be round the corner. Thank you.